Hello friends, welcome to my channel Simply Stocks, and today I'm going to talk about the evergreen consumer sector and five of the best picks in there. Many of them have corrected from the top, so looks extremely attractive from a 2 year point of view, 2 to 3 year point of view, and even from this year point of view, the stocks have corrected, so can give you 20%, 25% return over the next 12 to 15 months. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about these consumer stocks, a small request is kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now, about the criteria for picking up these stocks, these are established brands and strong management. These are quite larger companies or larger mid caps or large cap companies that I have picked up, which have corrected and looks good on the earnings front as well as on the charts. Low debt, no pledging, strong institutional holding, and solid return ratios and numbers are there. So if you look at the allocation part, probably put 10% and no more than that on any of these stocks or on all of these stocks and mix and match with your whatever stocks you're holding at the moment. Hold for the next 4 years and it will give you a very decent 25-30% CAGR growth. That's what I feel. It could double in 3.5 years, these companies, because they have gone through a slumber of many months, even 1 or 2 years in one case. So things look bright now, so it looks like that the returns could be better than what it has been over the last 12-18 months for these companies. Even from a 1 year point of view, these looks good. I think 25% CAGR is a very big possibility, but keep relevant stop losses according to your risk appetite on these companies. The first in this list is Dixon Technology. Now, probably most of you know about this company. It is a leader in electronics market and gaining market share with every quarter. They have been doing well, producing LED televisions, phones, and whatnot, even laptops, etc. for many brands like Samsung. And they have, you can say, tied up with many top level brands over the last couple of years or so, and have diversified into many businesses apart from washing machines, mobile phones, televisions. They are into you can say other kind of electronic products like water purifiers, air purifiers, etc. Consistent growth is expected going forward, and the company has, you can say, increased margins from around 3% to 4%, and even gave out 5% margins in one of the quarters in last year. So things are looking better, and the stock has corrected from around 5400 being the high. The stock is around 37, 3800. So from a 2 3 year point of view, looks extremely good. I will not be surprised if it surpasses new highs once numbers again start ticking in, and once you have the raw material cost curtailing. So valuations do look stretched even now, but it was even worse earlier. I don't see major downside from here. Numbers have been pretty good and numbers have been supportive for the kind of valuation it is producing. The kind of sales growth has been quite immense for the company. So it's again trading at 1.5 times 1 year forward sales, and doing great things. So I think around 3500 is a very good buy, very good support around 33 3400. So any dip towards 35 3600 is a good opportunity. It has corrected 32 33% already from the top. So looks very decent as a mid cap stock now from a 3 year point of view. The second in this list is very interesting. It's Asian Paints, and I have this in my long term portfolio of 15-20 years. Now, the stock hasn't done well at all over the last 1 year. In fact, has given no returns whatsoever if you look at the whole of 2022 from the beginning till the end. It is the leader in the paint segment and boasts of nearly 30% market share currently in the market. The strong management, we all know about the company. gaining traction in other segments as well. They are producing, you can say, sanitizers. They are into home furnishing as well now. The company had been doing well, but last quarter they saw a huge margin pressure, and the margins were pretty less for many quarters. I mean, lowest for many quarters. They were, I think, 14-15%. Not great margins, and that's why the stock fell. Although sales growth was again tremendous, around 30%, 35% year on year. So at around 2900, the stock looks very good. Around 2800, 2900. If it dips another 5% from here, that's where you have to jump in around 2800, 2850 for. Well, I believe that over the next 2 years or so, as consumption-driven economy picks up, the company is going to set to do extremely well. And currently, it is trading at 77, 80 times Asian Paints, which is at the lower end of their, you can say, PE. And so PE contraction has probably taken place. Unless the numbers are extremely bad, the stock should not go down further from here. So around 2800, 2900, between those levels, one can definitely accumulate Asian Paints for a good 24-25% upside this year. So this is another stock that could do extremely well from those 2800 levels. I see 3400 again coming in by the start of next year or so. The third in this list is Titan, again a large cap company. I understand that people might be looking for the small cap bets that could do extremely well, but these companies can give you short 24-25% returns. Titan again has come out with stellar set of September numbers, and hopefully December would be even better with the kind of wedding season we have had. A leading player in the jewelry segment has been into this, you can say, business for more than 100 years or something like that. Also has a share in spectacles and other verticals, but major business comes from, you can say, jewelry. So very strong numbers in a seasonally weak quarter. September is not their best quarter, so that's why the stock has done reasonably well compared to other companies that I'm talking about. And the stock is near its highs, just a little bit down from there. Any 3-4% decline from here because of market correction or anything, one can definitely get into Titan because it has extremely strong supports around 2500 levels. So any 50 to 100 rupee dip from current levels is a very good buying opportunity. Valuations are very reasonable, and it's a buy on decline kind of a thing. It's not that the valuations are extremely stretched with the kind of numbers that it is producing. Only 7% free float with the, you can say, public shareholding is 7%. So looks strong and should continue to perform. This is more or less not a 1 year trade, but an investment from 3 to 4 year point of view. I think it can double over the next 3.5 years with the kind of numbers it is set to produce going forward. Remember that the pandemic is just over, and the wedding, you can say, the wedding party should continue over the next couple of years, as much as it got derailed for 2 years in the pandemic. So should come out with strong Q3 numbers. It should end up doing extremely well, and the management is very strong, will perform over the next 10 years as well. So next 3-4 years, very good investment to get into Titan on declines towards 2550, 2570 or so. The next in this list is Blue Star, one of the leading, you can say, AC manufacturers, and has been doing well. The stock also has been doing well over this period of time, over the last 1 year. It has done well, 20-25% return, but I think there's more to come with the kind of numbers it is producing, and with the summer season upon us, which will be even harsher, unfortunately, than last year. So as I mentioned, this time around the summer should be even harsher than the last year. So these companies like Blue Star, Voltas, you have Vadilal, all these companies should start doing extremely well. Why I picked Blue Star is that it has more stability in terms of stock performance, in terms of how the numbers pan out for the company, and the fact that large institutional investors are more invested into this company. So a more stable kind of returns I'm looking at. I'm not looking at companies which have a double-edged sword and you can lose 25-30% very quickly. So in terms of Blue Star, It is focused on providing white goods such as water purifiers, air purifiers, AC, etc. It is a leader in the commercial AC services at the moment, doing extremely well. They also manufacture air coolers, water coolers, central ACs, commercial refrigerators, etc. And now their water purifiers has been doing well. So the other segments are also kicking in. So stock has done well, but is still undervalued. I still believe that the stock could trade at 60, 70 times earnings, and the earnings should expand going forward. The summer season is upon us. Demand should surge in the summer season, which should begin in a month or so. So I think over the next 3 years can easily double from here. Probably buying levels, if I'll discuss that, probably 1140, 1150 is a very good levels to buy at. 1100 is a strong support. So 5 to 7% declines from current levels would be very attractive with February March coming in. So if you see 5-7% decline this month, it would be a very good buy around 1130, 1140. Even from a 6 months point of view with a 20-25% upsurge. So this year I still believe that the stock could end up doing 1440, 1450. And so on dips around 1140, 1150, one can definitely look at buying it. Second thing is that over the next 3-4 years I see 2500 on the stock. So 3.5 years I see more than double the price. The market cap of the company is just about 11,000 crores. It's not a huge market cap considering the kind of business that Blue Star is into. And the fifth in my list after a long while is Britannia, with a kind of you can say management commentary that has come in for Q3, and hopefully the numbers would be even better. I think there is a turnaround factor for the pure FMCG companies like Britannia, HUL, etc. Now, Britannia is a leader in the baked bakery products, baked biscuits kind of products, and have gained market share over the years. In fact, in the last 2 years in the turmoil, it gained even more market share with people looking for packaged foods rather than going out and buying into open, you can say from open stalls, etc. There's high promoter and institutional holding, very high return ratios, strong stock, and debt at pledge free. Very good company to invest into. It just that the numbers were not that great, so the stock wasn't doing that well last year. But I think from this year onwards should perform. The stock itself, the charts looks extremely strong. Probably you can keep a 4100 stop loss on this long term trade, but I see the company doing well, and I won't be surprised if we see 5300, 5500 this year on the stock by year end. So one can definitely accumulate for a 25-30% upside. Next 3-4 years we have to see how the numbers pan out. Only then I can take a call. But for the next 1 year, a good 20-25% upside is very much possible. So this was a video on 5 of the consumer stocks that look extremely attractive going into 2023. Please like and subscribe my channel, hit the bell icon so you get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.